Our country is now similar to Japan 30 years ago. Prices are falling. Long-term and short-term interest rates have both fallen to historical lows. Products are conquering the international market. But the domestic market is slightly weak. When Yu Kaiyoming wrote this book 20 years ago, the Japanese scene in the 1990s seems to be happening in our country now. I spent a week carefully reading this book. I will spend about 20 minutes to introduce Yu Kaiyoming's viewpoints, and based on the current data, what might happen in the future. Finally, I will talk about ordinary people, how to spend this historical garbage time. The Japanese experience, balance sheet recession, and synthetic fallacy. Yu Kaiyoming's core point is that, when a country's overall assets decline, it forces enterprises to prioritize, from profit maximization to liability minimization, to repair the damaged balance sheet, rather than when the economy is good. Enterprises are pursuing profit maximization. When all economic entities in the country do so, it will form a synthetic fallacy. It is undoubtedly correct for individuals to do so. However, if all individuals do so, it will lead to collective irrationality. That is to say, the optimal behavior of individuals is detrimental to the collective. On a micro level, it will be detrimental to each individual. The above passage, for friends who have no knowledge of economics, may be difficult to understand. What is balance sheet recession? In layman's terms, it means falling asset prices, causing the balance sheet to be too high, or even insolvency. Let me translate it. You have a 1,000,000 yuan house and 500,000 yuan loan. When the house price falls to 500,000, you are actually bankrupt. But the 50,000 debt is rigid and won't disappear. You still have to live frugally to continue paying it. After saving money on loans, consumption decreases, since one person's consumption is another person's income. When everyone in society is frugal, the economic environment must be bad, so everyone's income has decreased. Everyone becomes more difficult. Leverage reduction and monetary policy failure. Liquidity trap. When those highly leveraged enterprises have more liabilities than assets, theoretically, the enterprise has gone bankrupt, but production and operations remain normal. Enterprises can still continuously create profits. So I think any rational entrepreneur would prioritize reducing corporate debt to enhance their risk resistance, instead of thinking about how to continue to expand for these enterprises. Unless they are desperate, they will not want to borrow more. When many enterprises in the whole society stop investing profits in reproduction, eventually leading to a decrease in total demand, the economy will be stuck in a quagmire and unable to grow. When companies stop borrowing but keep paying back, the central bank's means of adjusting the economy to adjust the economy will be difficult to work. Even if interest rates are reduced to zero, the economy cannot be adjusted. This is the liquidity trap. To put it bluntly, monetary policy has failed. The CEO of Nissan, Gore, who is going to be made into a movie, who escaped from Japan in a musical instrument case. When he moved from Renault to Nissan, he was shocked by the scale of Nissan's debt. All his life experience and education didn't tell him that he should pay off debts when interest rates were zero. But in the end, he paid off the debt and successfully reduced Nissan's debt. Lack of lending. The economy was in recession. From 1990 to 2002, the whole society in Japan, the country lost 1.5 trillion yen in capital gains. In the first few years, companies thought that the difficulties were only temporary, so they only reduced loans. Later, the bad economy made them lose confidence completely. So the author observed that even if the interest rate of large denomination certificates, enterprises no longer borrow money, but they were slowly repaying loans. Not only the banking system, the securities market no longer raised funds. In Japan in 1990, corporate sector borrowed 9% of GDP, 41 trillion yen in debt. By 2003, the net debt of enterprises had reached 9% of GDP, reaching 44 trillion yen. What is a sector? It refers to an organization or group with specific economic functions. The common classification is to divide the country into household sector, government sector, non-financial corporate sector, and financial sectors. From this chart of funds in different sectors, the change in surplus and deficit, we can see that in Japan in the 1990s, the surplus of individuals and households was gradually decreasing. I think it's because of the bad economy. They were constantly consuming their savings. The liabilities of non-financial enterprises decreased. As I mentioned earlier, because of the balance sheet recession, enterprises began to frantically reduce their debts. In 1998, it took 8 years. Had basically completed the repair of the balance sheet. Therefore, we can see that non-financial enterprises gradually changed from borrowing to saving in order to boost the economy, to avoid economic recession. Launched a round of investment. So the government kept borrowing money, issuing national bonds due to Japanese enterprises are competitive in international competition. Therefore, the trade surplus is large, and low interest rates in Japan create arbitrage opportunities. The funds flowing or investing overseas remain relatively stable. Finally, the funds of financial institutions show the boundary before and after 2000. Before 2000, the financial institutions sector was stable at 0. But after 2000, due to the profitability of enterprises, the traumatized corporate sector did not want to expand investment, but want to continue to pay more back and save more money. Therefore, we can observe that the money in the financial sector is in surplus. I think everyone will be like me. Ask a question. Why in a good economy, high debt ratios are not a problem? But once the economy is bad, debt often overwhelms enterprises. Let's make an assumption that a company is worth 1 million. With 60,000 in debt, net assets of 400,000, with a debt ratio of 60%. Because these valuations are evaluated under the assumption of good operation. For example, a business unit that earns 10,000 yuan a year, with 20 times pay, it can be valued at 200,000 yuan. But when the economic environment is not good, many business units can't earn 10,000 yuan, only 5,000 yuan. At this time, many assets within the enterprise will start to depreciate. You should know that a business is a combination of many elements. When they are skillfully combined together, they can generate benefits. Once separated, they may be worthless. The sales department has nothing to do without the production department. Without the sales department, the production department can only reduce production capacity only when they are well combined together. Can they make money together? A company worth 1 million yuan, due to poor efficiency, the depreciation line cannot be fully opened, resulting in a 30,000 yuan depreciation. The current asset liability ratio is 85%, which is already very dangerous. If the asset is impaired by 400,000, the enterprise will be insolvent. I think as any rational investor would not invest again. The enterprise itself will gradually lose confidence. Therefore, enterprises with high asset liability have poor ability to withstand economic fluctuations. Why does insufficient lending lead to recession? In a country, banks link personal savings with corporate loans together. For example, a person has 1,000 yuan of income, 900 yuan for consumption, and 100 yuan for savings. The 900 yuan consumption is another person's income and circulates in the economy. The 100 yuan deposited in the bank is lent to another person. Eventually, every 1,000 yuan of income is converted into 1,000 yuan of expenditure, thus ensuring the continuous operation of the economy. During the balance sheet recession, enterprises reduce borrowing. Let's make an extreme assumption. Businesses and households stop borrowing. The next person's income is the previous person's expenditure. That is, 90% consumption and 10% savings. His consumption is 900 times 0.9 equals 810 yuan, and savings is 900 times 0.1, 90 yuan, and so on. The initial 1,000 yuan of income gradually decreases to 900, 810, 729. The economy will gradually lead to deflation. This explains mathematically that when everyone in society saves money, the economy will definitely get worse, so everyone's income is reduced, and everyone's life becomes more difficult. But if the government can intervene and spend the 100 yuan and turn the initial 1,000 yuan income into 1,000 yuan of expenditure, GDP will not fall into a spiral collapse. Just now, we have only understood the balance sheet recession. Our understanding of balance sheet recession is only on the first level. But now, I think I can truly introduce what a balance sheet recession is. What is going on? Due to Japan's implementation of active fiscal policy, The balance sheet recession was not very significant. The economy only slightly contracted and stopped growing. Therefore, the author used the case of the Great Depression in 1933 to introduce a very significant balance sheet recession. Your savings in the bank are the bank's liabilities, and the loans made by the bank are its assets. As can be seen from the figure, from 1929 to 1933, both savings and lending both experienced a significant decline, but after 1933, due to the implementation of the New Deal, the government intervened and spent the money, thus leaving the bank, and entered the economic cycle. You can understand that the bank's assets and liabilities both decreased. This difficult time directly led to the bank's systemic balance sheet reduction. Let's take a look at this chart. Private sector lending decreased by 46% compared to 1929, and deposits decreased by 27.4%. Reflected in real life, people's lives were miserable. Dow Jones Index plummeted by 89%. GDP shrank by 46%. Unemployment rate soared to 25%. Farmers prefer to pour milk into rivers than to sell it in the market, while many citizens couldn't even get enough to eat. By 1933, thanks to the New Deal, the government borrowed $1.63 billion. Although private sector lending remained largely the same, but the money in the entire economic system increased. GDP returned to the level before the Great Depression. This is not just a bank balance sheet recession, but a balance sheet recession for the whole society. I think you can understand this. What is a balance sheet recession? Fiscal policy saves the economy. Zhu Kaoming, by studying the New Deal during the Great Depression in the U.S., he found that after 1933, the New Deal in the United States built 650,000 miles of roads, 120,000 bridges, and 120,000 public buildings. The Public Works Administration alone directly employed 8 million people, participated in the construction of public works, directly or indirectly, provided 25 million jobs. Under this influence, the unemployment rate in the United States dropped sharply, and fiscal revenue increased significantly. But the price is the government deficit. After Roosevelt's New Deal, GDP increased by 48%. Why do we say that people's has improved? Because in the United States, after exceeding a certain tax, it starts to pay taxes. From 1933 to 1939, the number of taxpayers rose from 3,890,000. It shows that residents' income has rebounded significantly. For Japan, in 1997, by raising taxes, cutting expenditure to achieve a balanced strategy, and fiscal consolidation, which pushed the Japanese economy to the brink of collapse. In June 1998, a 16 trillion yen supplementary budget saved the economy to some extent. What really brought the economy back to growth was that companies completed balance sheet repairs and began to borrow again. After the enterprises completed the balance sheet repair, began to gradually repair its own balance sheet. Finally, the overall economic operation of society maintained a certain degree of stability. As you can see from the graph, since 1990, Japan's finance supported the economy massively, from surplus to expenditure, which finally led to Japan's huge national debt. But the author thinks it is necessary. It is precisely because of these expenditures that Japanese enterprises, when GDP was equivalent to 3 years' worth, still be able to maintain higher than the GDP during the bubble period. That is to say, fiscal spending has taken over about 20% of GDP. If not, GDP would fall to half or even a third of its peak. Therefore, Mu Xiaoming believes Japan's fiscal policy is one of the most successful economic strategies in human history. The author believes that fiscal deficits and economic recession. Fiscal deficits are spending money in advance. Excessive fiscal deficits is indeed a heavy burden left to the next generation. A heavy burden. But in the author's view, evaluating this matter, we should not only consider the next generation, the total amount of actual debt they will bear, but also the health of the economy. The author thinks that an economy with sound policies and a good state, but with a certain deficit, is far better than an economy without any deficits, but is battered and bruised, but is dying and has no rescue. What about the situation in our country? Google Kaoming wrote in the Chinese version preface in 2002. In terms of similarities, China in 2002 was like Japan in 1990. People believed that house prices would only rise, but the real estate bubble burst when the housing price myth dissipated. Now, whether it's enterprises, families, or individuals, have all practiced frugality, cost-cutting, and efficiency-enhancing action plans. Enterprises have actually transformed the goal of maximizing profits into minimizing liabilities. In this way, we should thank the share market that never rises, that allowed us to avoid the double blow of the Japanese and property market, only facing the impact of the property bubble. Gu Kaoming also believes the Japanese real estate bubble to significantly increase the supply of housing. He believes that China's real estate crash, massive new residential buildings, can still bring about improved living conditions. This is obviously better than just the rise and fall of house prices, which is much happier than the Japanese people with insufficient new supply. Of course, he also believes that the complexity of China's economy is significantly higher, such as the middle income trap, population decline, rising unemployment, and geopolitical conflicts. A passage in the book describes the supervision of banks by the Bank of Japan is particularly interesting due to the Plaza Accord in 1985, led to a sharp appreciation of the yen, but Japanese assets soared rapidly. The Bank of Japan sent people to supervise the banks, warning not to provide too many loans to specific areas in Tokyo. But the banks, as lenders, asked, why not allow assets like this that have never fallen in price? Some inspectors warned that continuous rise for 40 years does not mean that the 41st year would continue to rise. In the atmosphere of overconfidence at that time, was not persuasive at all, until the situation got completely out of control. This passage was familiar in China before 2021. Compared with other countries, China's macro leverage ratio is not low. Overall, corporate leverage is too high, but the leverage ratio of government departments is low. Therefore, it is expected that government-led fiscal stimulus policies. Looking back at the national deleveraging strategy in 2018, it doesn't seem to be so successful. Meanwhile, due to the high leverage of domestic enterprises, it is expected that for a long time in the future, the corporate sector may experience a similar situation to Japan. The most priority goal will change from profit maximization to minimizing liabilities. Business owners should pay attention to deleveraging. In practice, the high accounts receivable and payable of the corporate sector may be the main reason for the high leverage ratio. Therefore, the evaluation criteria for a reasonable balance sheet should not be just a pure comparison. It is also clear from this chart that the household sector and the corporate sector have generally stopped increasing leverage, while local and central governments continue to increase leverage. But from this point of view, is somewhat similar to the situation in Japan. The implications for individuals and businesses. For most Chinese families, houses are the largest asset. The decline in house prices means that the wealth of most Chinese homeowners will be lost. The central bank certainly has ways to push up asset prices. For our country, it means to push the land price of ordinary prefectural-level cities to the level of New York, which is obviously impossible. For individuals, we should pay special attention to leverage management, especially mortgages, the reasonable allocation between financial products, distribution in the future. When you want to take on high leverage, and the people around you also want to do the same, and want to take on high leverage, I think the target price at this time will not be a good price. For business owners, the primary task should be to reduce the asset-liability ratio to a suitable level, which is called repairing the damaged balance sheet. Of course, individuals are the same, although it is a fallacy of composition, but it is indeed the best choice for themselves. Many times, personal interests and collective interests are conflicting. Secondly, we should pay attention to the government's investment direction. When consumption cannot keep up with production, the government should be brave enough to be the last buyer. Just like the Roosevelt New Deal in 1933, and Koizumi's reform in 2003. I judge that government spending will definitely increase significantly. Enterprises should be able to meet government demand. They should actively do business with the government. Japanese export-oriented enterprises are slightly better than domestic demand-oriented ones with the same starting point. Are slightly better than domestic demand-driven ones. In the case of controllable geopolitical risks, they should expand overseas as much as possible. Heavy debt is a burden that existing enterprises cannot get rid of. In a market with low interest rates and intense competition, existing competitors are often scarred. Startups can often go into battle with light loads. So, I want to say that when their competitors are battered and bruised, it may be the best time for startups. Real estate companies are the best case to understand balance sheet recession. Asset impairment, and crazy debt repayment.